Let's just start with your first take on that payrolls report.
Yeah, I think the message to me here is that employment growth is decelerating, growth in economic activity is moderating, but it's happening at a very gradual pace. This is a report that says the economy is growing around trend right now. We did 2% in the second quarter. We're on track for something a little less than that in the third quarter. So yes, things are slowing down, but it doesn't look like the labor market or activity is falling off a cliff. It's just a deceleration, and to me, that's the main takeaway.
Mike, what do you make of the distinction, the daylight between the soft data this week, weakness everywhere, and the hard data, this labor market report?
Well, I mean, it's a decent report. I think the upward revisions to the previous data are helpful. The wage data, actually, when you peel off salaried workers, was quite strong. Production and non-supervisory workers are now up 3.9 year on year. I think we're getting a catch-up effect in the household employment data, and that's what's pushing the unemployment rate lower. Look, I just think in these periods, you're going to get a mix of data, and some's going to be strong and some's going to be soft. It's rare that all the data align. And again, I would just come back to on net, when you filter it all out, things are slowing down, but it's not like a flashing red, the economy's falling off a cliff number to me.
Michael Gapen, always great to get your thoughts on a payrolls report. Michael Gapen there from Barclays. I want to bring in Mohamed El-Erian from Chicago to get his view on things. Mohamed, we've had dreadful data all week in America, then just a little bit of firmness in this jobs market report. Is it enough to take off the table the rate cut that the market put on earlier this week?
It's not enough to do anything, John. For those who are looking for a decisive message, a deterministic one, they didn't get it. This is a muddled middle sort of report. Not weak enough to confirm that weakness is spreading from global manufacturing throughout the economy, but not strong enough to suggest that we are immune. So I think it didn't actually change anything in terms of the assessment. And what it is consistent with is where you would expect the economy to be at this late stage of the cycle.
Anastasia, I want your thoughts, please.
Yeah, I mean, I think this was definitely a sign of relief for the market that this was just a muddle-through type of report. I mean, some of the data we were seeing earlier this week just suggested that we might be falling off a cliff, and clearly that's not the case here. But it is very evident that the manufacturing slowdown is continuing, and we're not seeing outright job cuts in manufacturing, but we're certainly not seeing any hiring. You know, I think the other flip side of that is also wages. You know, the headline, at least, was much weaker, what the consensus was. So I think you couple the fact that growth is slowing and the inflation pressures seem to be slowing as well. So I think we have to pencil in a Fed cut in October and probably December.
We've had a big move at the front end of the yield curve, Mike Collins. Treasuries really outperforming at the front end. The two-year yield down this morning, up just a couple of basis points, a handful. That is nothing compared to the journey of the week so far. What did you make of that move?
Yeah, so the curve's been flattening for years, right? And finally, which you normally see late in the cycle, is a curve steepening, right? Typically, when the Fed gets into motion, the front end rallies more than the back end. So you've had 20 basis points of a steepening in the last 5 weeks or so, which is really not a big deal. But I don't think you're going to see the normal big steepening you see late in the cycle this time. I think you're going to continue to see more of a parallel shift down from here.
Rick, when you get the so-called bull steepener, that's not usually an environment that does well for risk assets. What's your take on that?
So I still think we're pretty far from a bull steepener, but I think the front end of the curve is interesting because there's an asymmetric dynamic. Fed's not going to be hiking rates anytime soon. The front end of the yield curve carries really well. I actually looked at on the two-year note, the Fed would have to hike rates 6 times to lose money owning the two-year note on a 1-year period. So the front end is a great risk reward. And by the way, if the economy keeps slowing, Fed's going to get to zero pretty quickly. So the front end is telling you that. Listen, I think the front end is a good place to hide out. It's interesting where it's not as attractive today. As you go out to the belly of the curve, you go to the 5 to 10-year point, and I would argue your pricing in the forwards or pricing in term premium is pretty low today. And you've got some ambiguous data. You know, when you look at the survey data, and I find this industry just unbelievably focuses too much on survey data, like on elections. The survey data is not what people do. And the economy's slowing, but the forward curve is pricing in an awful lot today, and we don't think that's as attractive.
It's how people feel. It's how people feel about the future, and there's a read across quite generally, Rick, that maybe how people feel today is how they'll act tomorrow, and that's going to damage the hard data.
So I think that is definitely right, and I think we pay attention to it. but it doesn't tell you what actually people are doing. If you need to hire workers, you are going to hire workers. If you need to replace your vehicle, we got 17.2 million cars. You go and replace your vehicle. So I just think you have to put it in context. It's an early indicator. But oftentimes we watch the S&P 500 and all of a sudden purchasing managers comes down because sentiment changes. Same thing with elections. I think you just have to put it in perspective. The economy's slowing. It's just you got to think about what is actually happening. We're looking at Costco's numbers, year-on-year sales. We could debate how good that number was, but the economy's definitely not falling off a cliff.